If I was buying my very first home in Canada in 2025, I wouldn't do what most first-time home buyers do. I've worked with Canadians for over 10 years, helping them with mortgages, debt, and financial planning. I've seen so many people make the same mistake over and over again. Today, I'm going to walk you through exactly what I would do differently if I was starting fresh, buying my first home this year. These insights could literally save you tens of thousands of dollars and financial stress. So grab a coffee, stay with me, because this might change how you look at buying your first home. I'm Thuc, your money guy. With over 10 years of experience, let's go through this together. Forget the dream home. Start with the numbers. Most first-time home buyers chase their dream home. Big kitchen, perfect neighborhood, shiny finishes. But that's a trap. In 2025, affordability is tighter than ever. High home prices, high carrying costs, and economic uncertainty. If I were buying today, I'd flip my mindset. Start with a budget, not a wish list. Figure out what monthly payment I can comfortably handle after taxes, groceries, daycare, other payments, car payments, all of it. Work backward to the price point that makes sense. Because here's the truth. Banks will approve you for more than you should take. Just because you qualify for a $700,000 mortgage doesn't mean you should. If you start with your emotions instead of the numbers, your first home could be your first nightmare. First thing first, one of the biggest levers you have when buying a home is your credit score. If I was a first-time buyer today, I would spend at least 6 to 12 months making sure my credit is in top shape. Why? Because a better credit score gets you a better mortgage rate. Let's say you are buying a $500,000 home with a $400,000 mortgage. At 5.5% interest, your monthly payment is around $2,450. At 4.8%, it's around $2,300 a month. That's $150 a month, $1,800 a year. That's $50,000 over the lifetime just having better credit. So I make sure my credit cards are under 30% utilization. I pay every bill on time and avoid opening new unnecessary accounts. That's money in your pocket even before you step into your home. The down payment strategy, bigger is better. In Canada, your minimum down payment can be as little as 5%. But here's what I would do differently. I'd save for a bigger down payment. Why? There are two reasons. Number one, I'd want to avoid CMHC mortgage default insurance. If you put less than 20% down, you pay thousands in insurance premiums. That protect the bank, not you. For example, $500,000 home, 5% down, $25,000. You pay nearly $20,000 in insurance. Add it to your mortgage. Number two, lower monthly payments. Bigger down equals smaller loan, less interest over time. If I was starting today, I'd aim for at least 20% down, even if it means buying a smaller home or waiting an extra year. Because in the long run, you are buying peace of mind. Here's the golden rule. It's not about how fast you get into the market, it's about how strong you are once you are in. Location and lifestyle. Think 10 years, not 2. First-time buyers choose a home based on their right now life. But your first home is often not your forever home. If I was buying in 2025, I'd ask, will this area grow in value over the next 10 years? Is there transit, schools, hospitals, job growth nearby? Could I rent it out if life changes? For example, a client bought in Hamilton in 2014 instead of downtown Toronto. At the time, friends laughed, but Hamilton exploded, and their $350,000 home is now worth over $800,000. You don't just buy a home, you're buying into a future neighborhood. If this is making sense, and you want more straight talk about buying homes, mortgages, and money in Canada, hit that subscribe button right now. That way, more people like you will see this content and avoid costly mistakes. One mistake I see all the time, buyers go house shopping first, scramble for financing. If I was buying in 2025, I'd flip that. Get pre-approved first. That means the bank checks your income, credit, and debt and tells you the max loan you qualify for. This locks in your rate for up to 120 days, which protects you if rates jump. And here's the kicker. Having a pre-approval makes you a stronger buyer. Sellers take you more seriously. It can be the difference between winning a bidding war or losing it. Too many people think, I can afford the mortgage payment. I'm good. Wrong. If I was buying today, I'd budget for property taxes. It can be $300 to $600 a month. Home insurance, utilities, hydro, gas, water, maintenance. Rule of thumb is 1% to 2% of the home value per year. That's $5,000 to $10,000 annually on a $500,000 home. Example, roof replacement, $10,000. Furnace, $6,000. Hot water tank, $2,500. These aren't if expenses. They are when expenses. If you don't plan for them, you'd end up swiping credit cards, and that snowballs into debt. Now, this might be the biggest one. If I was buying in 2025, I'd buy below what the bank says I can afford. Because here's the reality. The stress test, interest rates, inflation, job uncertainty, all of that means your margin for error is slim. If you qualify for $600,000, maybe buy at $500,000. The extra buffer gives you breathing room if life changes. Layoffs, kids, higher bills. I've seen too many first-time buyers max out, only to become house poor. A house should give you security, not financial anxiety. Remember, you want to own your home, not let your home own you. Here's one of the biggest lessons. Think long game. So if I was buying my first home in Canada in 2025, here's what I would do differently. Start with the numbers, not the dream. Build my credit first. Save a bigger down payment. Choose a location with the next 10 years in mind. Get pre-approved before shopping. Budget for all the costs. Buy below my means. Because buying a home isn't just a milestone. It's one of the biggest financial decisions of your life. Do it smart and it becomes a foundation for wealth. Do it rushed and it becomes a burden. If this video helped you, subscribe for more videos like this. Every week, I break down Canadian money, mortgages, and housing so you can make smarter moves. I'm Thuc, your money guy, making money simple, smart, and stress-free.